All right, guys, welcome back to the channel. It's Millennial Trade. So we got some good news. Powell is hinting at a slower pace when it comes to the rate hikes coming up here in December. Both the Fed and the ECB, the European Central Bank, are going to be raising rates around the 14th through the 15th, basically. Fed Chair Jerome Powell spoke today at 1:30, and the market reacted extremely positively to his speech. Not a whole lot changed, but just a little bit more, I guess, less bearish confirmation, a little bit more confirmation that rates possibly might be raised by only 50 basis points in December. No talk of a pivot, no talk of inflation slowing down really anytime soon. So other than that one comment he made, not a lot has changed, but the market, I mean, you can look at the price action yourselves. The NASDAQ is up nearly 5% on the day. Huge moves. The dollar came down. The VIX also filled a gap here. I mean, I'm just looking at this price action. I was not trading it. I was actually at the gym. I think I was actually doing shoulder presses when I was listening to Jerome Powell's speech. And I had a window open on my phone for one of the Webull charts. I think it was the QQQ. And I'm just watching this thing go. And I'm thinking to myself, on the first pullback, I was thinking to myself, this could be a really good bullish trade. I didn't take it, because I just figured I just sit this out and watch. Because a lot of this, I think, a lot of the price action that we saw, I mean, even in the SPY is up 3%. I think some of this was kind of a squeeze. I think it was shorts just sort of closing positions for the day. I mean, it looks great on the daily. Don't get me wrong. The QQQ, I mean, this is the kind of bear market volatility that exists. If you just look at the chart of the QQQ, today's candle is similar to the candle we had at the bottom a few weeks ago. I think that was October 14th. It looks almost identical, the type of candle, this very bullish green engulfing candle, but who knows how long this can sustain. I would like to hear back from you guys. Do you think this short-term rally, will it sustain? Can it propel us into December and well into the new year? I would love to hear back from you guys. I mean, I reported this morning, I think it was, I want to say a Morgan Stanley guy was saying that the markets could fall another 25% from current levels right now. I'll have to find that again, but there's still a lot of bearish sentiment out there, still a lot of reasons to be bearish in the next 3 to 6 months. You know, the main headline, obviously, Powell hints slowdown in rate hikes possible in December, right? And that's all it says. They may scale back, right? It says the Federal Reserve may scale back their pace of interest rate hikes. So it's not a definite, right? There's still a chance they'll go with 75 basis points. I still think that's possible. In fact, a commenter earlier today said, I'm hoping for 75 basis points. Let's go ahead and get it over with. Let's just get it done so we don't have to come back here ever again. I think it was a John that commented that, and I wholeheartly agree. And I think Powell kind of hinted towards that. I mean, towards the end of his speech, I actually have some notes. I want to go over the notes. That I found interesting, information that I found new that I didn't know before, right? Obviously, you've been following this for 2, 3, 4, 5 years. A lot of this is going to be second nature to you, but if you're trying to figure all of this out, I took some notes that I thought were, pressing issues concepts to try to tackle when learning about this. But he did say that they were going to stay the course. And his exact comment about the 50, not the 50 basis point rate hike, but the next rate hike, the comment he made was, we think we're in a place where we could try to start to slow down the pace of the rate hikes. A lot of this Fed speak, right? Fed double talk. They're worse than Verizon. I got off the phone with Verizon today, the issue about my bill. The Verizon double speak is absolutely crazy, but the Fed double speak really just takes the cake. But overall, he said that they're going to stay the course, and he said it's better to do it now so that they, just like the commenter had said earlier today, said it's better to get this done now try to tackle the inflation, raise the interest rates, get the unemployment up. Better to do it now than to wait on it. He says if we wait, which they did kind of wait and wait and wait, and they told us inflation was transitory. Now they're saying, Jerome Powell is saying that he still sees a fairly clear path towards a soft landing, which would include higher unemployment, maybe even 5% unemployment, but no recession. I mean, they could cook up the books any way they want to make it look like there's no recession and high unemployment. So I'm not exactly sure, for whatever that's worth. And I'm trying to give these guys a chance, right? I'm trying to do this neutrally, kind of not be biased one way or the other. Some of the most interesting points that he made, concepts I'm just starting to understand, is like a lot of this has to do with the job market as well. He said the supply and demand within the job market has to normalize. And by normalize, he's talking about this huge gap between there's like millions of open jobs and just not enough people participating. He basically blamed COVID and lack of immigration, when it comes right down to it, for this huge gap in the amount of jobs that are open compared. I think it breaks down to, for every worker out there, there's 1.7 jobs available for them, right? So if you're not working a shitty job, they have a shitty job for you if you want it. And you got to think too, it's a gap between about 3 to 5 million, I guess, 3 to 5 million open jobs here. Obviously, COVID deaths and immigration can't account for all of it. So what does that mean? That means they want to push millions of us back into these sort of low wage, no future type of jobs look at the railroad. They don't even get sick leave. I think the railroad, on the last threats about strikes and everything a couple months ago, the railroad company settled on 1 paid sick leave day. So those railroad workers, they don't even get paid sick leave. And a lot of these, I worked in a warehouse for over a year recently. You get forced into working overtime, and then you just keep doing it and doing it and doing it. And workers want a better quality of life. This is probably why a lot of people are not participating in the labor force. But Jerome Powell is adamant that we need to basically bring the supply down for jobs, which will also help inflation somehow. There was the concept about the natural rate of inflation and the natural interest rates, and the Fed admits that they don't know what they are, that there's no real way to tell, even in normal balanced market conditions, what the natural rate of inflation would be. They said they have no idea. So they're basically winging it. That's my understanding. They're basically making this up as they go along. And I talked about the transitory inflation propaganda that we got for months and months and months. Well, now the story is we can still avoid a crash landing. We could have a soft landing, high unemployment, but no recession, or higher unemployment and no recession. So the whole concept of the Fed's forecasting, right? There was a question that was asked at the end of his speech about, well, if your forecasts are so off, or if you don't know about inflation or how it works, or the natural rate of the inflation or the natural rate of interest rates, if you don't know all these things, why even make predictions? And he said, well, we're the Federal Reserve. It's our job to monitor the economy and the monetary supply. And he says we'll continue to make forecasts and reevaluate. Again, he just went on another kind of Fed doublespeak rant, I guess, while trying to answer the question. Sometimes he seems real on point, but other times Jerome Powell seems kind of like he lacks, maybe he just doesn't know, or maybe he's kind of iffy. He kind of reminds me of Fauci in a lot of ways. He reminds me of Dr. Fauci a lot, the way he sort of, I don't know, it's the art of wordsmithing, right? Word wizardry. That's what these guys are really getting paid to do. So yeah, the jobs and the unemployment, right? Millions of shit jobs are open. So, they're going to try to flood us into that market or bring the jobs market down. the Fed did say that even though they don't handle the supply side of the jobs market, which would be mass migration from other countries to fill that gap, they said that even though that's not their end, they did say, they're not making any recommendations, but they said that, policies that would promote population growth would be beneficial to the economy and would help us somehow fight inflation and get rid of this whole problem a little bit faster. And it just makes you wonder, these are the kind of cosmopolitan economical ideas that we're supposed to accept, that we're not supposed to question, that we're not supposed to figure out and actually think about. But it's like when they're calling for such drastic changes to a country, you have to sort of be somewhat interested in, what their agendas may be. Yeah, the path to the soft landing, I just wonder if that's more propaganda, like the transitory inflation. These people, they give us little clues, and then they kind of like, they draw it back, and they say one thing. Somebody else from the Fed will say something completely different. Like, you had Bullard calling for 7%. I guess that would be the terminal rate, like the peak of the interest rates at 7%. And if you think about that, which really spooked the markets, this was like a couple of weeks ago. But if you think about that, even 7% interest rates, those are not high interest rates. Like where we're at right now with I think we're at 3.75, or they pretty much went from 0 to 3.75 in the matter of months. Over the course of like almost a year now. Those aren't super high interest rates anyway. So just because there's a lot more pain ahead. That's basically what I'm trying to say. I think there's a lot more pain ahead, even though they're telling us that they're still planning for a soft landing or whatever. I think there's a lot more pain that all of us are going to have to face financially. And there was an interesting question about the 2% average, and they kind of, remember I was asking the question on all of my most recent videos, is this an average over what? 5, 10, 15, 20 years, decades, 100 years? We really don't know, but they gave us a kind of a clue. Powell was asked about this, and he said that, well, to figure out the average rate of inflation, we have to at least go through a full economic cycle. And it sounded like to me he was talking about like 5-year cycles. So 2020 was kind of the start of this new cycle is how he explains it. And they need to see this interest rate hike program and bringing the inflation down. They need to see it into 2024, 2025, possibly into 2026. That would be the full cycle before they would really know if they've reached their 2% average inflation target. Of course, they could change the goalpost at any time. We could get to 2025 and they say, oh, well, we need a few more years. The economic cycle's still playing out, right? Who knows? One can only speculate. But I thought that kind of answered my question a little bit, because it's like, well, if they're going from 2020, right, an average inflation target from 2020 to 2025, that's what it sounded like to me, which kind of answered my question. It sounded like they were, the full economic cycle, at least how they're regarding it, would be from, basically the period of wage growth up until about 2020. And since then, because this is a huge issue they're trying to tackle as well, the wages not growing for certain jobs, certain sectors, and but he says he's proud of the jobs he's done. They raised rates by 375 basis points. Unemployment's at 3.7%, which is a 50-year low. And that they're going to stay the course to just get it over and done with. So the fact that he said they're in a place where they can think about maybe trying to slow the pace of the rate hikes, I don't think that guarantees 50 basis points in December. But let's say it does. Let's say it's not 75 basis points. 50 basis point rate hike and then another 50 basis point rate hike. I mean, if they're going all the way up to 6, let's say they're going up to 5, they still have a couple more rate hikes to go. If they're going up to 6 or 7, they might have a few to go and a few 75 basis point rate hikes to go. I won't be surprised if they surprise the market with the 75 basis point rate hike. But I suppose now it is possible that we should plan for 50 basis points. But regardless, how is the market going to take this? And what's the lag effect going to be? The market may rally past December 15th and into the new year because, the participants are just bullish on this 50 basis point rate hike instead of 75 basis points. But there's going to be a lag effect. How is the next rate hike and the rate hike before it going to affect the markets into 2023? Because you got to look at the long-term picture here. Look at the big picture. The mass liquidity from the central banks is no longer here. We're not in that era anymore, and we probably won't be at least until 2025. Well, not even mass liquidity. They're not going to loosen up from their restrictive monetary policy at least till 2025, according to Powell. And if inflation is entrenched, which they claim it's not, but if it is, that's a whole nother problem on our hands, And this is all very uncomfortable, but think about when the deflationary process comes. That could get even worse. But I will leave it there for now. Let me know what you guys think in the comment section down below. What do you think about the rate hike in December? And did you watch the speech or read the speech? Was there anything else in it that I didn't cover that you thought I should have? And with that, I will see you guys on the next video. And go follow me on Instagram at Millennial Trades. I'll see you guys next time.